Welcome to the Collective Genius Podcast, the show for real estate investors who are looking to scale.
Welcome into the Collective Genius Podcast. Another week, another member. We're bringing you here on the Collective Genius Podcast, the podcast for real estate investors that want to continue to grow and scale their businesses. There are a lot of members that we've brought you over the year, the last year that we've been doing this show every single week. I'm excited to bring you another one. Please welcome in from Georgia. Most recently was in Atlanta and now has made his move. You can see probably the river. If you're watching this on YouTube, you can see the river behind him just south of Savannah now. Please welcome in CG member, Mr. Dan Underwood. How are you, my friend?
Good, sir. Thank you for having me.
It's good to have you. This is, I understand, I was shocked by this, but this is your very first podcast interview. Is that correct?
It is, yeah.
I can't believe with all the expertise that you have, the single family, the commercial, all the expertise, no one's ever asked you to be on their pod?
I've had everybody in the company pushing me to do certain things like that, but I for some reason, it just never happened.
Well, we might not be doing this then if we didn't have a relationship that we built with CG, but also building houses in Mexico through our nonprofit arm. Got to develop a pretty good relationship with your family, my family, and I appreciate you joining me. And let's tell your story here. I'm excited to tell it. You are one of those entrepreneurs, my friend, that I want to intro you properly here, but I also want to start off with letting everybody know that, you know, there are a lot of people that come into this group. They're crushing single family and they're growing a portfolio, or they have a lot of active income, and they say one day, you know what, I want to evolve past the single family piece of it. I want to continue to do new things. And Dan's one of those people that has done that, has made that transition from crushing single family to moving into bigger asset classes, and I'm excited to tell that story here. So why don't we start with this, Dan? Why don't we start with where you're based in Georgia, and what it is that you do right now, and we'll go back and learn all the other things that you started with in real estate.
Sure, yeah. So recently moved down to just south of Savannah. I've been here since June of last year. Prior to that, most of my real estate and single family was all Metro Atlanta. But right now, our primary focus, I did pick up single family. I actually got rid of single family for about 3 years, and I actually picked up single family maybe about 8 months ago. I got back into it. Yeah, just to kind of fill some gaps. The commercial world's a little slow when it comes to acquisitions. So we picked up, and we're not heavy hitting in that area. I mean, we try to flip 2 to 3 houses a month. That's all. We're not trying to scale that out of, that's not my biggest focus of the company, but it's basically, I use that to kind of fund the rest of it. And it gives us the opportunity to acquire the commercial properties.
As you should. That's for those that are listening that say, I got to get out of single family. Almost every person that we've talked to that has made the primary transition to a different asset class always fills gaps with the ability to have active income, specifically quick active income to fund other things. Almost every single commercial person that we've had on said, I enjoy doing deals and I enjoy making money. So single family seems to find its way back in. At your height, when we first met, you guys, like a lot of investors in Atlanta, I mean, at your height, how many deals were you doing on a monthly basis?
I don't remember the quantity of deals, but I know we were poking along at about 4 million, just shy of 4 million and primarily we were probably 90% wholesale at that time. Maybe even more than that, probably more like 95% wholesale. We would take the occasional flip. Now I'm complete opposite. I don't do any wholesaling. I've had a couple happen in the last year, just in general conversations with somebody local. I'd sell it to you and treat it like I didn't know what wholesaling was. And I'm sure we could find a way to sell you the opportunity, and I might do 2 of those. But right now I don't chase wholesaling. I don't like the headache. I don't like the scrambling. And I found it's a lot easier to deal with the flipping side of it. And actually, we're in the process of starting up new construction as well.
So funny that how cyclical real estate is, and how many different ways that you can make money, and how 10 years ago, 5 years ago, whatever it was, oh, I got to switch from flipping to wholesaling because it's easier. Now I'm hearing you say it's easier for me to do flipping and new construction than it is the headache of wholesaling. So interesting how things change and evolve. And you have made this transition in your professional real estate career. We were talking earlier that you grew up in this area just south of Savannah, had an entrepreneurial kind of surrounding, with it sounds like a marina. I love telling the stories of our members and investors that I've known for a long time, and I always learn something new. And I always ask the question, because this is a journey. People want to know, man, I started with this and I'm doing that, and people can relate to other entrepreneurs' journeys. What is it that when you were growing up, you were like, this is what I want to do? Was it real estate?
No, it's funny. So somebody actually asked me this like 4 days ago, and they were asking, "How did you get in real estate?" And I said, it's weird how it started, but I think the first thing that I actively sought out to go buy and sell, I bought a stackable washer and dryer for my first house, and back then I was chasing. I had no money, I had nothing, and I remember buying a set for $80, and then a lady called me and said, she's telling me another set, the exact set for about $80, same thing. And so I ended up with 2 of them, and I brought one of them in the house and put it in my living room. I remember it had Bubblicious grape bubble gum all inside of it, and I spent the night scraping goof off or using goof off to scrape the bubble gum out of it, and I turned around and sold it for like $400. I was like, man, that was the easiest money I've ever made. I made $300 just messing around with it at night for one evening. So I went out and I started buying these washers and dryers left and right. And I had a living room. This is my first house, little 3-bedroom. I didn't know what house hacking was back then, but I had rented 2 of the rooms out to 2 people that I worked with. And I had these dishwashers these washing machines all over my house. So I was doing that, and I did that, I don't know, maybe 6 months. And then that turned into trailers, and then it turned into cars. And I think at one point I bought a dump truck and a garbage truck, and I flipped all kind of weird stuff on the way to real estate. And I got into real estate probably, I think, with intention. I got into real estate probably 2011, 2012.
When you were flipping all these other things, started flipping washing machines, which, by the way, that's a first. I hadn't heard washing machines. I heard couches. You had Casey Ryan in Las Vegas on recently. He was flipping a very specific vehicle. He was flipping, I think it was 1989 and 1991 Jeep Cherokees. That very specific
I know
vehicle.
all over them. Yeah.
He was flipping that specific one because he said he could get it for a couple grand. And he would sell it for 5 or 6, and did minimal other than mostly. It was like a hotel. Right? He was just cleaning it out for the most part, kind of like you were doing with the Bubblicious story there. He just cleaning it out and was flipping them. And so that's the first, though, I've heard from washing machines. Where I was going with that is, what were you doing for work while you were flipping these things until you started going, all right, I can do this full time?
I think when I first started doing that, I was working. I was working for a guy out of Ohio, and he kept putting me in different divisions of the business, and I was growing. So I ran a machine shop for a little while. I ran a welding shop for a while. I started a bunch of manufacturing companies for this gentleman that I used to work for.
I see. So your operations, you're overseeing the development of this business for this industry. So you have you're kind of that entrepreneur, right? Is that what it's called, I believe? You're an entrepreneur where you are working for somebody else with using, a very entrepreneurial mind.
Yeah, and that guy, he was probably pretty instrumental to that growth as well, because I worked for him for about 9 years, and I used to, I learned a lot from him. He would come to me and say, "Hey, I want to be in such and such business." He said, "I'll give you $800,000. You go to the auctions, go find all the piece of equipment you need. You come back, here's your budget, but I want to be in this business in the next 6 months." And I think that was probably one of the most valuable. I still keep in touch with that guy today. He and I are good friends, but um, that was probably one of the neatest opportunities I've ever had. Now, I worked for that guy 80, 90 hours a week. I mean, it was brutal. I worked.
But that's part of the process, right? You're working. It's almost like working in a entrepreneurship. What's the word I'm looking? Apprentice, right? You're working apprentice hours, actually getting paid instead of not getting paid as an apprentice. You're learning this craft, and look at how influential that was for your future, right? It made you think of, hey, I can go out and start anything in this country. Doesn't mean it's going to be successful. Doesn't mean that there's not going to be long hours. Doesn't mean that there aren't going to be heartaches along the way. But clearly, you saw something there. You started on the side doing that while you're working for this gentleman, and eventually got your way to real estate. So it's 2011. You make your way to real estate. You know how to flip all these other things. Did you just assume that you knew how to flip a house?
No. My first house flip, I think it was a combination of maybe podcasts, I think Bigger Pockets was probably my start. I was coming out of Dave Ramsey mentality and going into getting into Bigger Pockets and starting to see a bigger picture. And I actually bought my first house with the intent to flip it, for the sole purpose to flip it. Did everything wrong. It took me a year. By the time I had started and finished, it took me a year to flip this house. It was only 900 square feet. Pretty substantial renovation, didn't pull any permits, got busted. After I'd already sold the house, had to put a guy up in a hotel for 3 months. Like, it was the worst. I still managed to I think I made about $50,000 on that deal, but I remember thinking that whole thing felt like an enormous failure. And I remember it took a big reboot, mental reboot at the end of it to say, hey, you still did it. You still managed to make good money on it, but it felt terrible along the entire way.
Felt terrible. I learned a lot, I'm sure, but it could have been a lot worse. I mean, most people that I talk to in their first deal, they're not making money, especially with putting someone up for 3 months and having permit issues. Were you adding square feet? Because a 900 square foot house a year? Please tell me you popped the top or you added some square footage.
I went through probably 3 contractors. I got burned by one. It was 3 months of that was just, I think I probably had 30 days of stop work order, and I had 3 months of putting a guy up. So 4 months of it was just sitting idle. Probably lost 2 or 3 months of bad contractors. I mean, it was everything that could have gone wrong went wrong.
Except losing money. I mean, it's a miracle that you made money on that deal.
Yeah. And that's actually, I know I know how I run my business and my tranches and all that, but that was the first tranche I'd ever started that now today I've rolled the proceeds from that has now become 4 storage facilities, just having rolled all that over the years. So it's neat to see what it was and what it is now.
You are, when it comes to operators within our community that I've met over the years, you are really good at utilizing this platform, this industry for what it's truly done for a lot of Americans, right? It's truly built wealth versus just creating another job. And we'll get to that. I want to make sure that we get to that point and we focus on it. But you do this first deal, and you're rolling these proceeds, so it means you have more. After this first deal, what's next? Where do you say, all right, now I'm all in on this, I'm going to keep buying. What's the next piece of this?
I didn't touch real estate for another 6 months. I was mentally exhausted. I was convinced that I'd screwed it up. It wasn't going to work. it took me a minute, and I was really involved in my other companies that I was working for. I think 6 months in, it took me a little bit of probably took me a little bit of just talking myself back into that it was a success and it wasn't a failure. Um, it took me putting it on a spreadsheet. Actually, I think one of my turning points was putting it on a spreadsheet, because during that time, though it took a year, I would go meet my contractors maybe 6:30 in the morning. That was one of our working stipulations. I had to meet my contractors 6:30 to 7 so I could make it to work on time and not raise a red flag. Normally I was at work by 6 a.m. But I would schedule that Monday, Wednesday, Friday. And I went back and looked at the overall amount of time that I'd spent on that activity, on flipping that house, and added up all the hours, and it was something ridiculous. I mean, it was like, I think I had spent a total of 80 hours or something, or 40 something, whatever it was, I forget. But it was like, over here I'm working 4,000 hours a year, trying to make, at the time, I felt really good about making over 100,000. That, to me, back then, that was the success. And then I looked at this and I said, and I worked 40 or 80 hours, whatever those numbers were, to make this $50,000. And that for whatever reason, it took a while for that to click. And then after that, I started actively, I think the next year I bought 3 houses that next year, and managed to pull about 50 out of each of those.
So you got it rolling now. You take 6 months off, and for those that are listening, that are, maybe you're a year or two in the business, and you're struggling through it. Even this is for those that have been in the business for a long period of time. And post 2022, the business has changed. There's go back and evaluate. Because it's not as bad as you think, and it may not be as great as you want it to be, but it's not as bad as you perceive it in your mind as well when you really do these self audits. So you've got this rolling now. You've at what point do you go, all right, I've got enough coming in that I can go and just do this full time?
Yeah, that year that I did 3 flips, I think I made about 150, 160,000, which is equal to about what I was making at my other job. And massive amount of respect for my old boss. So I drove to Troy, Ohio. I left work at 2:30 in the afternoon, got in my truck with my resignation letter, drove to Troy, Ohio, which is like 8.5 hours. Showed up in his driveway the next morning, said, "Hey man, we got to talk." And I owed him a lot, but it was that was it. From there, and during that time too, I was I was so overworked. I was so burnt out. I told him, I was like, "You don't want me here. I've got nothing left. Like, I'm not of value to you anymore." And I think I was in trading school, learning how to trade the markets. That's where I met my previous business partner, who introduced me to wholesaling. And that's kind of where I kind of took a leap. I will do this flipping thing. And then I met the guy that did the wholesaling. I said, well, there's where I find my leads and more flips. And it turned into more of a wholesaling gig than it did a flipping gig, but it kind of got off the rails, and it took me about 4 years to figure out that's not really what I wanted to do either.
So that year is right around that time is when I met you, is when you had your former partner. You guys were starting, you were doing wholesale time. And if I remember correctly, I know you don't remember the number, but it was over 100 for sure. May even been pushing 200 when I first met you. And back then, everyone in Georgia was doing great because all the institutions were buying, especially from a wholesale standpoint. So we had more Georgia members, I think, at that given time than any time ever in the history of the Collective Genius. And it wasn't just Georgia, it was North Carolina, it was Texas. It was any of those states in which institutions were buying in that we saw an uptick of members doing or future members doing really, really well. And you were in that partnership doing wholesaling as the main exit strategy for how long?
That was 4 years.
Okay.
Yeah.
In 4 years, you make a decision that this isn't what I want to do. How'd you get to that point?
It wasn't easy. That was so rates had started. That was when rates spiked. My my partner at the time, he was very much aggressive. Let's buy. And then I felt the need to pull back. I'm a big nerd on compounded growth, and I looked at all the time and effort I'm spending on this growing this wholesaling operation, and I'm giving up the opportunity to buy these long-term wealth building opportunities. Um, every time we seemed like we got, a couple steps forward, we were taking that money and pumping it back into marketing and all these other things. And to me, it was like, well, this is the thing that will never end. Like, it won't go away. I never did manage to find either a strategist or a salesperson as good as I was, or I felt that I was. So I just felt like I was stuck there. And that was about the time that when the rate spiked, I think that's when I actually was, at the time, gosh, I can't think of the guy's name, but anyway, I went out to meet with a gentleman. I paid him $10,000 for the day to set up Rob's. I still haven't done this today, but he and I just got to talking, and he was asking me all these questions. He kept talking about my partnership and my relationship, and well, do you think the value is here in this and the value here in this? Anyway, by the end of the day, he and I just sat for 8 hours just talking. And what I left that meeting with was that I'm determined that I'm not in the right business relationship. And instead of setting up Rob's, I ended up leaving there with the decision that I was going to break up with my business partner. And
It's a $12,000.
Probably the best $10,000 I've ever spent. Or at least
What was he setting up, Dan? Rob's?
I forget what it stands for, but it's an investment strategy where you set up. I'm not super familiar with it. I got so close to doing it, and then that's been years ago now. I guess, coming up on 4 years.
So you go out there, he asks all these fact-finding questions, and you realize that nothing bad towards the relationship. It's just not equally aligned with your investment goals.
Right.
All right. So you make this decision to stop wholesaling. Now, when you made this decision, because here's a gap that we got to fill here. You had the rates were starting to change, so the business was going down, at least at the level that it was, prior to the rates going up in March or April of 2022. Mm-hmm. So you're seeing a decline. You're like, this is not what I want to do anyway. I'm putting more effort, more work towards this. But you had to have assets, and you had to have things that you were already holding in order to make a decision like this. So where were you at that given time with your investments? Where were you at with, how many doors and revenue that you had coming in when you made that decision?
I would say at that point I had 35 apartments, and maybe a mobile home park. I think by then I'd had the mobile home park. And I knew that we were closing on a big wholesale commercial deal that was going to bring in. This is something I kind of started on the side, building this other opportunity, but I think we were going to make like $400,000 on a commercial wholesale, and I think that's also where the disagreements came from. I remember I was driving from South Carolina where this deal was, and I got a phone call from some of the office, and it was, why aren't you here chasing this one particular thing? And it was going to make the company like $5,000. And right over here, I think without believing in that it's feasible, which I had the belief, and I think others did not. But I said to me, it just made no sense that I was chasing these $5,000 effectively revenue, not even in my pocket, but revenue opportunities for $500,000 opportunity. When I left that, I did try to wholesale commercial solely, and later even tweaked that, determined I wasn't really even that I wanted to do either.
So that is a true definition, what you just described of, picking up pennies and stepping over dollars in your mind, especially at that given time, this is for me for long term of what I want to be happy with. I'm going to spend time more on the commercial side. And you had to, it sounds like you had to, swim upstream a little bit and figure out what you were looking for that to be as well. Where have you landed with that? Because I know that like you just mentioned, you were looking at wholesaling commercial. Where have you landed today with the purchasing and flipping of commercial assets?
Yeah. So now we were bridging the gap. We were wholesaling, anywhere between. I mean, we were picking up duplexes. We were picking up 10 units and just selling them, making $50,000, $100,000, $200,000 cracks. But and wholesaling commercial is a little bit harder. The bigger the deal, the more due diligence necessary that's going to be expected. So you kind of had one shot. You had one buyer. That buyer screwed you over. You didn't really have another shot. It wasn't like in single family. You could walk in, 20 minutes later, you kind of got an idea what you need, walk out, cash. I mean, you kind of hanging everything on whatever buyer. So it turned out that was a lot of stress also. And those deals they were hitting maybe once every 2, 3, 4 months. I think we went 6 months without doing a deal. And so you had huge surges and then you'd have huge dips. And those dips were those are hard to live through with sanity. And that's when we kind of start picking up single family again, just to start plugging in the voids.
Sure.
But today, I mean, I scheduled to close a 90 unit in about 30 days, apartments. And then we've got a storage facility that closes also in about 30 days. So the root of my business is still buying commercial, optimizing, and then rolling them. I refer to them as tranches, but I'm constantly rolling smaller assets into larger assets. My 90 unit that we're closing, it's a 1031 out of 12 units in North Georgia into 90 units, and we're not coming to the table with anything outside of the proceeds. So we just keep rolling. I just keep rolling them up into something larger.
You're playing Monopoly. You are taking houses and turn them into hotels for the Monopoly reference there. And you're one of the few people that I've ever sat down with that organizes those tranches to continue to level up, where a lot of people just sit on assets. You're always looking to continue the long-term wealth building, the long-term retirement, all those things that are included in that. You're always looking to continue to level that up. Is it exclusively apartments and self-storage, or are there other asset classes from a commercial standpoint that you're looking at?
Yeah, so I've heard all kinds of guidance and stick to what you're good at, stick to one thing. And I own mobile home parks, RV parks, one RV park, apartments, and storage. My primary holdings would be storage right now. I just found those easier to acquire for a period of time. But to me, it seemed like if I pigeonholed myself to one asset type, if those deals were there, they were. If they weren't, that means you're not buying anything. So I took courses in all kind of different asset classes to better my knowledge. And my personal opinion, managing storage is not much harder or different than in managing apartments. And some people say storage is fantastic, and I would argue it takes me 10 to 15 storage tenants to make up what I make in apartments. But I don't have to deal with evictions, but I still got to deal with auctions. And so to me, it's kind of, there's trade-offs. I look at it as diversification. It's operating inside of 2 different softwares instead of one for managing. But other than that, I mean, I really don't find them to be that wildly different. The RV park, I mean, it's same thing. It's a long-term RV park, so effectively it's a mobile home park. And we jokingly call that one the golden child. That one makes fantastic money. It's the hardest thing I'm doing right now is to turn that one into the next size asset, given how much it makes and what I've got in it. So it's that I think that's my biggest challenge right now is I have to continue to not find complacency in one asset, even though it's doing really well. And I just got done building it over the last 2 years. It's doing so well now. I don't raise capital. I don't do anything outside really per se for commercials. So I'm at the mercy of whatever money I've got or whatever assets I'm willing to roll to the next one. So it is tough watching a good one go and roll it into something larger and starting over.
Do you have to? Is that something that you want to do in every deal?
No, I don't. And I know the answer is either raising capital or making, and it's one of those things that I do it a little bit for single family. And right now, I mean, in our single family, we pay really good returns on those, but I've not ventured out and done in commercial yet.
I see. For those that are listening that, are wanting to continue to grow and scale and want to grow into to new asset classes, clearly, we've given you plenty of member examples over the year that we've been doing this pod. Dan's another good example of that. But what I have, and I'll reiterate this, what we continue to come back to is that most of these investors haven't just said, I'm jumping only into self-storage or I'm jumping only into RV parks. Most are deal junkies. They want to do deals. It doesn't matter what the asset class is, and you pigeonhole yourself into some of these things when you just go to, I'm only going to do multifamily. Well, if you started in apartments in May of 2022, you were going to starve. Same thing prior to that. That asset class at that particular time probably wasn't the best time to make that transition from single family to multifamily. So taking what the market gives you, Dan's obviously proven that and showing that he's currently doing that with filling the gaps, from a quick turn standpoint with the single family, while always on the lookout for these other commercial opportunities to always level up his assets. Now, that all said, if somebody is, looking to make this jump to add an asset class, what's the best way? People understand in single family, I have to be a marketing and sales machine in order to do deals, or I have to be really good at referrals. I have to be really good at the courthouse steps. I have to find a way to get direct to seller to do deals. How does that work in transition on the commercial side? Where are you finding, or how do you find your commercial deals?
I mean, I think so. Like, I look back at our single family and our wholesaling days, and I think that was probably one of my biggest disagreements. Old business partners, super cordial, like we're very good terms, but we always differed. All the attention has to be on this one thing, and we got to get better at this one thing, and nothing else is focused until we do this one thing. Until we become this wholesaling machine, we're not doing anything else. And that's where I, respectfully different in opinion. If you're not working on that one thing on the side, it will never start. Same theory as compounding interest. The path to 100 million, the first 3 years don't look sexy at all. Matter of fact, the first 10 years don't look sexy at all. But it doesn't happen until it starts. I mean, it has to start with something. And that's the biggest, I think that's where a lot of folks, the instant gratification of a wholesale deal. Yeah, it's nice to get in our case, we generally try to only chase 50K checks and more, but it's always nice to get that check. But if that check just goes right back into marketing and doing more wholesale deals, I mean, that never stops. So I would say for whether it's learning, educating, I mean, I didn't know anything about storage. This sounds terrible. Scott Myers, I mean, I learned my storage. I got all my knowledge on storage from him, and I took a course, and at least then I felt confident to start looking at deals. And I remember buying the first one. Matter of fact, I think the first one I bought was a wholesale. I bought it, and I think I was too nervous to buy it outright, so I wholesaled to somebody and made, I think, a quick $50,000. And looking back, I wish I would have held it because it was probably worth about 300 in equity, 400 in equity, had I just ran it for a year. Not to mention all the tax advantages and the ability to 1031 and grow, compound its growth tax-free and all the other things, right? There's all kind of other things related to commercial that I think a lot of people don't focus on. But I know when you start plugging those numbers in a calculator and you start looking at, my whole idea is I know I want to get to this place, and then how do I get there? And I think that's the biggest thing a lot of people don't look at is right now I'm just going to focus on making money with no plan. But if you start working compounding growth backwards it's just a simple math equation, then it becomes, hey, how do I get there? So I think for me, that was probably the thing is you got to start working on it just so you can start that compounding growth piece. And once it's started, It's the hardest part. It's 3, 4, 5 years in. It's like, wow, this is really neat what it's turned into. The example of the house, the nightmare house flip, the first one I ever did. I mean, it is like, I have not put any more money into these deals. Everything has been a 1031 up into what is now four storage facilities. So that all started with $17,000 I put down on a flip deal, and it's now worth, I mean, just that tranche alone in equities probably, I wouldn't say it's probably pushing 3.2, 3.3 million, and that's, that growth is fantastic.
You said something there that clearly, I mean, congratulations. I mean, you've really been focused on that piece of continue to grow that tranche and the others that you have. You had already had apartments, so you understood how to find deals. When you started wholesaling, you already knew that part of it. But for that person that, is just, you said you got to be working on something else that you want to do in order to grow it. How would that, if they were in your shoes and you're like, I want to start and sell storage, you said, hey, I got with Scott Myers and learned, from him. How did you start sourcing those? Like, where's that next step to start sourcing those type of deals? Even if you don't know anything about it, you got to obviously learn from someone that understands that asset class. But how do you start that process of finding what are quote unquote deals?
I mean, I guess it depends on how aggressive you want to be. You either take a big chunk of change and go throw it at a list, just like anything else. You can buy a list of multifamily, you can buy a list of storage, you can buy those lists just like you can buy anything else. And then the most conservative way, you can get on Google and use skip tracing and do one-offs while you're sitting in front of the TV. You can do that. I mean, it depends on how aggressive you want to be with it. Buying lists, I would argue buying lists is, everybody's buying lists. So that's the easy avenue. We kind of use.
So how did that you can do all those things, but how did you do it? How did you
first, I think when we first started buying wholesale deals, we bought lists in the beginning. When I bought small multifamilies to wholesale, I bought lists in multifamily. And those were duplexes to 16 units. I think it's the largest wholesale we did on our first go around. And then after that, started scaling the size of the property up, and then got a little more focused on selectively finding properties based on different criteria. We go, actually looking for different properties instead of buying lists. A lot of times what I found out is a lot of what I was finding wasn't actually on a list in the first place. So we found different means of finding those too.
What's the best source right now that's working for you for any asset class in general? What's working for you to find deals?
Mail is still primarily a good heavy hitter for us. Mail and cold calling. Cold calling, I say cold calling loosely because a commercial deal is often 1 year, 2 years, 3 years in the works. Building a relationship with somebody, I'm probably a little more old school, but I spend a lot of time in front of clients. I drive 50,000, 60,000 miles a year. I'm constantly in front of people. I'll shoot the breeze with an old man that I've known for 2 years just to stop and say, hey. And what I found is eventually that turns into commercial. I've found, letting go of a house is an emotional ordeal in and of itself, but somebody who's built a commercial asset that supported him and or their family for 20 years, that's way bigger. And so to get somebody to agree to let go of that, that takes I found that takes a lot more work. Not all of them. Some of them are easy as a single family deal, but there are some that I have bought and I think about how much time it took me to get to that place. And relatively speaking, it's not much. I mean, it's, it might be 20 hours, 30 hours total, but how many people are spending that much time trying to chase any particular deal?
Yeah, you look at the avatar that you're attacking specifically on self-storage, commercial assets. Typically, that individual has owned that facility for 20, 30 years. they're our parents' age. They're probably in their 60s, 70s. This is someone that is used to doing business belly to belly and relationship type of deals. And if their family's not going to take over that asset, then more than likely they're going to look to sell that to someone that they trust is going to be able to perform and that they want to have it. I have that word right there, want to have it. You know what? If this is not going to continue in my family, I trust that you, I want you to have this because of the relationship that we have. I have properties that are in my portfolio just because of conversations just like that. I know you'll be a good steward of this asset, and that I want you to have it. Now, it doesn't mean that I get, preferred pricing per se,
Right.
but I get first dibs and someone that is willing to negotiate at least a little bit because they really truly want me to take over that asset. So such great advice. There's one that I tell people all the time, man, it's where real estate investing has gone. Everything is so direct to seller, especially in today's market. If you are not in the business 20, 30 years, you've got to do things that are different than the people that have these 6 and 7 figure month marketing budgets. And there's a great example of how you get into something that you're either not in today or you're trying to do more of. You build relationships. Amazing how that works. Get off social media and go actually drive by some things that may be something near something that you already own, that you look at the asset and say, that's something that I'd like to have in my portfolio in the future. Love that advice. Thank you for sharing that. Here in 2026, we're not quite halfway through the year yet. What are you most excited about for the remaining months of 2026?
Yeah, not to beat on the tranches and all, but they all hit different levels. They constantly are hitting different levels, and I have 4 this year that are all due to roll, and they're all due to roll into that $3 to $5 million purchase price range, which will make, we're very strict on our buying, and we're, as far as cash flow. But I mean, it should have a massive effect on the path. I wouldn't say the path to retirement, but the ability to retirement. That's I think that's probably what I'm most excited about. I think what I've hated about real estate was every month you started fresh, back to zero. Where in this world, not to say, I mean, it's single family the same way. Flipping, there's part of flipping that I can't stand. And we're looking at new construction for those reasons. I'm about fed up with some of the flipping portions of it, but it could all go to poo in a handbag, however you want to say it, tomorrow. And there's a portfolio sitting there that I don't have to worry about anything. I crossed that bridge about a year ago. Blessed to say where we live now, like we just moved to a house on the water, which I'd never dreamed of, and I could stop flipping tomorrow and it's all paid for. I wouldn't say it's without stress, but it's all paid for. And I think at the end of maybe in the next 12 months, it's paid for. Lifestyle is paid for. A lot of things are paid for. And the amount of stress relief that comes with all that is probably, that's something that's worth millions as far as I'm concerned. Sleeping at night, just not having to think about where's the next dollar come from.
You have built something special here, my friend. I mean, clearly, what most people start in real estate, reading the Rich Dad Poor Dads of the world. That's generally where most people start when I talk to them on this show. Reading some type of book like that, they get in it for the wealth building, and you truly have built that type of model. This is something that I know people listening to this are excited about, that people are truly not just doing this from a transactional standpoint and growing wealth. If looking back at that first stacked washing machine that you sold and made a couple $100, did you ever think that it would be here from that?
No, back then I was I remember I didn't go to college. I remember thinking I was impressed with myself back then because I made $60,000 a year, and that to me back then was,
Mm.
look what I've accomplished. And no, I would have never gathered it would have got this far.
Well, there's a book to be written there one day, my friend, when you accomplish all the things. And I appreciate you telling that story here today. If people want to find you, are you not much of a social media person, are you?
No, I keep pretty quiet.
Yeah. If people want to find you though, outside of finding you there on the river, well, how would they find you?
Yeah, cell phone and email probably the best ways to reach out. Happy to share those with you. But
And we could put those. Share the email that way we don't get your cell phone blown up. Share your email. Yeah, put that in the show notes.
yeah, Dan at lockwoodig.com. That's probably the best way to reach me. And yeah, I probably some of the best things that I've been these best changes I did. I moved to the water, and now you and I get done with this, and I'm probably getting on the boat and
Good for you.
get back before sunsets.
Well, tell me this before you get on that boat. You've been a member of this organization for a while. What is the community meant to you?
So to your question, could I have ever imagined having gone this far? I wouldn't have, I think surrounding yourself with other people where, so-and-so, I mean, haven't talked to Al Green before, haven't talked to a bunch of different people and said, well, that guy, and not in a mean way, but it's like, if that guy can do this based on how he tells his stories, like, I think I could probably do it. I could try it anyway. And, I think once you've kind of seen other people do it, was that iron sharpens iron. I mean, just being around people that are always doing it, it makes you think, well, that maybe it's more normal than I thought it was. And then I remember I was terrified buying a 16-unit apartment complex, and now you do it with your eyes closed.
Right.
And even now, I mean, getting ready to close on 90. It'll be our biggest apartment deal ever that I've done so far. And even that one's not even that daunting at this point. But asked me to have done that 6 years ago, and I would have told you, no way, not going to happen. Like, I would have been way too scared, way too nervous, but not have thought that it was that feasible.
You hit on something, Dan, that I think is underrated, and I probably don't talk enough about. You want to be in the room where you have people that are doing things that are bigger and not always better, but bigger and pushing. And I think sometimes where we get lost on it, you are who you surround yourself with. But it's also that, man, that person, I thought, if I would have not known that person and got to meet them, I would have thought that they were, so much, on a higher level than me. But the reality is most people that you meet in this room, they put their pants on the same way that we do. And it's that understanding. That's the Roger Bannister. Well, if he can run an under 4-minute mile, I can do that as well. And that's such an underrated piece of being in the room with high performers, is that you realize that I'm capable of doing that as well. So thank you for sharing that, Dan. Thank you for sharing your story. Appreciate your friendship. Appreciate you being on the show here today. And you made it through. You're not sweating. You made it through your very first podcast interview, and you did great. Thanks for joining me.
Thanks for having me.
Awesome. If you'd love to be in a room, I mean, goodness gracious, listen to this story. Dan has done a lot of this before he joined CG, but obviously a lot more of it since he's been a part of this community. If you love to be in a room with members like Dan, we'd love to have you. The best way, if you're a full-time real estate investor, to find out more is to go to our website at explorecg.com. There you'll find everything you need to know about our community, all 4 tiers. If you're a full-time real estate investor, more than likely, we have a community that is there ready for you. That's explorecg.com. What a great interview today. Thanks to my guest, Dan. Appreciate you as always. Thanks to you for listening every single week and all the feedback that you give. Continue to share the show. We appreciate all of that, and we will see you next week on the Collective Genius Podcast.
New episodes every week. To learn more, visit explorecg.com, where real estate investors come to scale.